In 1982, a man named William Porter wrote software for the Apple II computer that could pull real-time stock market data. Just a year later, in July 1983, a Michigan dentist used that same program to complete the very first online stock trade. That moment marked the birth of the online stock market. We often think of today's financial markets as something entirely modern, high-tech, complex, and tightly regulated. At best, our imagination goes back a few decades to the chaos of Wall Street traders, shouting into phones and tossing papers in the air, just like in old movies. But the truth is, this story began hundreds of years ago. First truly interesting stop is 13th century Bruges, a bustling trading hub. There, the Van der Beurze family ran an inn where merchants gathered to do business. It became such a landmark that in several languages, the very word stock exchange or bourse comes from their family name. Back then, people traded goods and promissory notes. Stocks as we know them today wouldn't appear for another 300 years. The first shares. In the 15th and 16th centuries, the great age of exploration, fleets of merchant ships set sail from Europe toward the New World. These journeys were perilous. Storms, pirates, and stormy seas meant that many ships never made it back. When that happened, investors lost everything, and new ships couldn't be built. So people came up with a new idea. What if several investors shared the risk? They could each fund a portion of a voyage, and, in return, share the profits if the ship returned safely. Of course, that also meant sharing the risk. If one ship was lost, others might still make it home, bringing back enough wealth to cover the losses. This was the birth of investment diversification. Until the early 1500s, most trading happened in coffee houses, inns, or public squares. But in 1531, the world's first stock exchange building was built in Antwerp. For nearly a century, Antwerp was the beating heart of global trade until the Amsterdam Stock Exchange took the spotlight. There, investors traded the world's first modern shares, those of the Dutch East India Company. This was a game changer. People no longer had to invest in a single voyage. Instead, they could buy shares in the entire company, spreading risk across the whole fleet. In the late 1700s, a small group of brokers, wearing their trademark colorful jackets, gathered under a tree near 68 Wall Street in New York. There, they came up with a way to trade stocks in a regulated, organized manner. That moment marked the birth of the New York Stock Exchange, the foundation of the modern financial markets we know today. After World War II, the American middle class began putting more and more of their savings into the stock market. This wave of democratization made trading easier and more accessible than ever. In 1971, NASDAQ launched, bringing electronic tracking of trades into the mainstream. By the late 1980s, Charles Schwab introduced a DOS-based portfolio service that ran over phone lines. And then came the early 1990s, when the first online trading platforms opened to the public. E-Trade led the charge, becoming the face of a new digital era of investing that still shapes the market today. Today's market is a lot more complex. You can't just walk into a cafe and chat with a few brokers anymore. That's why at BrokerChooser, we've done the heavy lifting for you. You can find over 100 in-depth broker reviews on our platform, and we track tens of thousands of brokers to help you find the one that truly fits your needs. That was a quick journey through the history of the stock market. Which part would you like us to dive deeper into next? Let us know in the comments below. And if you enjoyed this video, hit the like button, subscribe to our channel, and check out our other content on investing and brokers. Thank you for watching this video. Goodbye.